But let's move on to our next management, Honeywell Automation. Remember, the numbers looked very, very good. To understand what went on in the past quarter, what's the way ahead, we're joined by Mr. Ashish Gaikwad, the MD of Honeywell Automation. Hi, Mr. Gaikwad. Thanks so much for joining in. Always good speaking to you. But the past quarter was a pleasant surprise, so it makes this conversation even more interesting. Your gross margins have recovered to around 50%. I remember the last quarter we were talking about why were they a disappointment? Well, this time around, they surprised us positively. Do you expect gross margins to hold in this vicinity of around 48 to around 50%? That's point number one. And the second factor is on exports. In the past year, what was the contribution of exports to the total business mix?
Well, you asked me the whole gist of the business, Nigel. Thanks for having me. So first of all, I think we are happy with the performance that we have given in this last fiscal that we closed. We've grown about 12% or so in orders, and those are quality orders. I have discussed the quality orders definition in the last few interactions we have had, and also a 17% revenue growth year over year. So almost about 3 times that of GDP growth. And as far as the gross margins are concerned, if you take a look at our last 4 or 5 years of performance, those have been in the range of about 47 to 50%. And you got it right. So, and it's a matter of how the mix of different businesses is coming in. So on a quarter-on-quarter basis, it could be moving in that particular band, but we are very optimistic because the pipeline is looking very good. So that's on the gross margins. Then the second point that you asked me about the exports. Well, what is changing, and it's changing quite nicely, is that the domestic markets are really opening up. And that basically gives us more opportunities to play in the domestic market, in the capital goods market. So therefore, that ratio, which we try to maintain about 50-50-ish, is kind of in the range of 40-60 now, 60 on the domestic, 40 on the exports. And I think we'll continue to make progress on both sides as we get opportunities in exports as well as domestic.
Mr. Gaikwad, just to counter question you on that, last year you did around 3,400 crores. So 40% of the business was from exports, safe to assume, approximately that. And I ask you this because the export revenue fell from around 1,400 crores to 1,100 crores, and the street was getting a little bit worried. So do you, are you telling us for the past year as well, it was in that vicinity of around 1,250 crores, 1,300 crores?
Yeah, I think it'll be in that vicinity because you have to look at the global scenarios, different economies that we have a play in, the European economy, the North American economy. And so it'll depend a little bit on the growth that is happening in those economies, which in turn give us the engineering services that makes a part of our exports business. However, like I said, as we drive more the domestic business, that ratio can tilt a little bit.
Mr. Gaikwad, morning, Reema here. I believe you're guiding or targeting a 12 to 14% top line growth going forward?
Well, like I say, normally I don't want to hazard guesses on the future looking numbers, but I can tell you that our order bookings are looking very good. And also the pipeline that we look at is looking quite encouraging, especially in the sectors where we play strongly. Oil and gas, refining petrochemicals. The oil demand in India, unlike in many other economies, is not going to peak until the late 2040, right? So that's good news for us. Secondly, as India becomes the pharmacy of the world, the life sciences and pharma investments in India give us a good boost there. The digitalization in the industrial sector and in the infrastructure sector is continuing to give us a good optimism in our pipeline. We also see this whole energy transition, where the renewable energies automation is coming in. We have some gigafactories being planned in India. Automation for that is going to be extremely important for productivity. Also on the infrastructure side, airports, hospitals, tunnels, etc. So all of these sectors, when I look forward over the next few years, is very encouraging for us.
So double-digit growth at least?
Yeah, that's what we target. We've talked about it in the past interactions. We would normally want to target about 2 times that of GDP growth It may or may not happen always on a quarter-to-quarter basis because we have long cycle businesses, but we certainly want to, target that.
Nominal or real, Ashish? I'm just joking. Nominal is 10, right? So 20%. Okay.
Well, yeah. Go ahead.
No, sorry. Sorry, you wanted to say something?
No, I said in the range of about 10 to 12% is what we
yes. So,
grow.
Real,
of course, there are opportunities to go beyond that.
Yeah, no, got that. So it's interesting, right? I mean, you mentioned all these sectors where growth is really picking up and things are looking good. We had the management of Thermax also recently with us, and they've been saying for some time that the way this cycle is different as compared to what we saw earlier was that the past sort of boom that we saw in the capital goods, etc., which is when you got to go back, I think, 10 years, it's much more granular. I mean, the orders are smaller. They're not driven by, 1, 10, 15,000 crore order, which then is chunky, sure, but it also is, if it goes wrong, then the entire thing collapses. It's not like that. I mean, it's much more diversified. You mentioned, for example, gigafactories, etc. We had the management of Amara Raja with us yesterday. They're building this out. So we hear this all the time. My question is, do you see this upcycle to be a lot more durable, FY24 and beyond? And do you see this, the pace accelerating? Your assessment?
Absolutely. And I think that's why I said we are optimistic about the pipeline and the sectors we serve. Different companies may be serving different sectors. For us, it's not those, big projects. You mentioned some numbers that matter, but it's the volume of the total orders and, more importantly, the quality of those orders that matters. So we have to strike that balance between the top line and the quality orders that can give us good cash flow as well as the gross margins.
All right, Mr. Gaikwad, what about margins? They were waning in the middle. Now, for the past quarter, they're in the mid-teens. Do we head towards high teens, given that exports as well is improving, the engineered services business is improving? High teens?
Well, I think mid-teens is for sure. I think we've been able to balance some of the challenges that we've seen in the past 2 years, which affected us due to pandemic. And now, after that, the geopolitical situation, supply chain, etc. We've talked about it in the past. But now I think things are stabilizing. We have been able to get our arms around supply chain. We are able to, fulfill the backlog that we had on our products, short cycle business. So we are optimistic about both services and products that bring that mix, which will continue to help us on the bottom line.
Mr. Gaikwad, thank you very much for joining in. Congratulations on a good set of numbers, and we look forward to chatting with you more often. Do make your presence felt more. That's Honeywell automation for you. But let's